Hey everybody, welcome to the weekly wrap-up here at verifiedinvesting.com. Of course, I'm Gareth Soloway, Chief Market Strategist, and today I want to go back to last week, this past week, and talk about the keys and then look forward into the next week. Where are the trades going to be? What levels are we looking at, both on crypto, commodities, as well as the markets overall? All right, so number one, bulls are back on Wall Street, 4 days up in a row, starting to get their mojo. The question is, how high are we going to go? I have levels for you to take a look at where I'm going to start shorting this market pretty heavily. Right now, I'm still mostly long, riding this push. I did take AMD off the table today for a 13% gain with members of Smart Money stocks and ETFs, but for the most part, still riding other plays to the long side before I start accumulating shorts pretty heavily. Again, in other words, I do believe this market is just a reprieve point before another major leg down. Follow me over here. Let's take a look at what the indices are showing us for the day into the weekend. Again, Dow basically flat, but remember, the Dow's only about 30 companies, right? 30 companies, so one or two down can really affect the Dow. This is where you want to look more for the general outlay of the markets. You have the NASDAQ up 178 points, or just over 1%, and the S&P's up almost 0.6% as well, up about 31 points on the day. Oil today, 30 cents higher, basically flat. It is still forming an amazing bear flag, folks. So again, I still think it can go as high as around 65 to 66, but once there, look for that next leg down. The bear flag should start to play out. Gold today pulling back. Again, I called a top on gold. We had a beautiful blow off top, topping tail on both the daily chart, and now it looks like there'll be one on the weekly as well, right at a parallel channel crossroads. And again, that was a beautiful little trade to the downside, and I still think it's headed lower. My first support is $3,140. All right, that's first major support. It's about 150 more downside dollars on gold before it finds support there. And take a look at Bitcoin trading at 95,300. If you've been following my game plans, I've said, guys, it's going to go touch 96 or pierce 96. The high today on Bitcoin was just a hair below 96. That is going to be a major test of the chart for the bulls versus the bears. Can it get through this 96 100 area or not? There should be resistance. I think it's going to get rejected off that level, at least in the short term, but time will tell. Flipping to the S&P 500, here it is, folks, right? So here's your daily chart of the S&P. This was Monday's day right here. And remember what I talked about in the game plan. You had the big green candle right here. This was kind of what we would refer to as the flagpole of the flag. You then had a retrace candle the next day. The low of that candle was right there. All right, any sort of close over here below that low, the bias would have gone quickly to bearish. But interestingly enough, right here, all we did was test that low right there. We never closed below it. The bias remained bullish based on probabilities. And remember, folks, this isn't about personal feelings or anything like that. Throw that out the window if you want to be a good investor or trader. It's all about the charts. The charts held that low. The bias remained bullish. 1 update, 2 updates, 3 updates, and 4, albeit today is a little on the smaller side. We are up on the day. The other thing that's still bullish for this market is that the high of the flagpole, if we draw a line right here, and my line's not perfectly straight, but the point being is we are just above that high. That to me remains or keeps the bias bullish into next week. Now, just because I'm bullish into next week doesn't mean that we're not going to have a down day in the mix. You can always have a down day. It's random. You know, you figure 4 up days in a row, we might even be due for one. But we should still head higher, and the level I'm going to start to heavily accumulate shorts starting right here at gap fill right up here around 5,700. All right, on the S&P 500. So if you're looking for a level, that is my level that I'm watching like a hawk. It coincides with this gap fill right here. And again, at that point, it would also be a key Fibonacci retrace. So again, by the way, let's keep in mind, the way I trade, I don't go all in right there and say, oh, well, this is going to be definitely the top. I dip toes in the water. If it goes a little higher, I can add. Ultimately, for me, this is a market that's now in a downtrend, and you're getting a retrace. And eventually, I think, whether we go here and fall or we go a little higher and fall, I do think, based on every chart I've looked at, and I've shown you millions of charts, it seems like, that eventually we're going to turn down and get another leg lower, easily testing this low and probably going quite a bit lower. So we'll keep an eye on that, folks. And of course, I'll keep you updated in the game plans every morning, Monday through Friday. Looking at the QQQ. So if we flip over to the computer here, the QQQ, same sort of thing. This low held, which was your retrace candle after the big up day 3 Wednesdays ago. That held right there. The bullish bias was maintained 1, 2, 3, 4 up days in a row. And we are very close to being into a potential resistance level where, again, I would start to accumulate some shorts. 10-year yield is down today. And remember, anytime the 10-year yield is down, the markets likely will be up. Look at this. This was a down day. This was even a down day. Now, you might say it's a green candle. Why is that down? Well, because you opened all the way here and you closed here. But look, this was your close. This was your previous day close. So it was still down, right? And then so down day, down day, down day, down day. And if we look at the S&P, right? Up day, up day, up day, up day. So notice each day the yield, the 10-year yield is down. The markets are rallying to the upside. But again, there is some issues here. Maybe we go down a little on Monday, but we're coming back into this key support level. If yields start to bounce again and move higher, the markets likely will turn lower. U.S. dollar. We basically have a small update today on the U.S. dollar. I still think, again, in general, with technical analysis, when you break a major trend line, what ends up happening? Well, you break it sharply, you confirm, and then oftentimes you'll get what we call a retrace to the scene of the crime, which is back up to that line. But now that line is confirmed resistance or major resistance, and oftentimes that'll yield another move to the downside. So again, keep an eye on that. We may go back to this line around 101.90, 102, and then on the Dixie, I would say a move down below 98 would be the likely scenario. Google reported earnings today, kind of a weak move. Opened higher and then kind of petered out, considering the markets are doing relatively well today. That is a poor performance for it. I still think there could be more upside. I'm still holding my position with Smart Money Stocks members. We're in the money about 10%, but I'm looking for a little bit more up here in terms of a target range. Intel reported poor earnings. It's basically down, but it hasn't moved much since those earnings, again, were released and it opened this morning. Bitcoin. All right, here we are on Bitcoin, guys. Let's go to the charts here. Let's take a look. I'm going to bring up this chart here with you guys so that we can take a gander at the level. So remember where I came up with this, right? So I was studying charts and I was saying to myself, wow, so you have this trend line that goes all the way back to 2007 high, through this high, to the exact high in 2021, to the exact high in 2024 and 2025. This line is parallel to that line. Look at where we are. We're right on the underbelly. That's where I'm coming up with that 96,100-ish resistance. And to me, I probably, if it hits it over the weekend, I'll probably start a small short position on Bitcoin off of that level. And again, by the way, keep in mind, not to say that I'm bearish on Bitcoin overall. Overall, the long term, I like it. It's just I'm a trader. So I'm going to be shorting it when it tells me to short, and I'll go long when it tells me to go long. Oil today, neutral to upside here. So a little bit of a bounce to the upside. Look at that classic bear flag pattern. This is your major resistance. If we zoom out on the chart, look at this. This level was respected all the way back here. Here it was resistance, pulled back, hit, pulled back, breaks out. Then look at how many times it has hit over the last multiple years. We have finally broken and confirmed. That means 65 to 66 becomes epic resistance. And look for it to roll over here once it gets into this level. Maybe it doesn't even hit that, but for me to short it, it's got to get to that level, and then I would consider a short opportunity. Silver, let's look at silver. I know a bunch of you guys love silver. Silver, again, is not that interesting lately. It had the big dump with the markets, the big bounce, came in here, consolidated, got above and consolidated, popped, a little bit of a drop here. You know, supports here, resistance up here. It's just kind of hanging out in a range. It's range-bound trading on silver, certainly not as sexy as what gold has done of late. And then natural gas kissed my major support level yesterday. Didn't tag it, so I didn't go long. And then we're getting a small bounce today. But you can see, again, the levels working with like a charm. Pivot lows here to here, and then that's where we kissed, and we're getting a little bit of a bounce right there. All right, so listen. This week has been a week where the markets have been generally getting positive comments from the White House, like we're talking to China. China then says, no, we're not. But the markets are willing to believe the president at this point that we're talking to them. Ultimately, they've been comments like maybe there's a deal coming with some of these other trading partners. Right now, we're in this period where if the markets are going to have another leg down, they need to lure the bulls back on board. And I think that's what's going on here. So while net over the midterm, I'm still bearish. Shorter term, for the last week or so, I've been bullish, and I'm still bullish, although the upside is getting less and less and less as we rally up into some of these levels. So again, be ready for that. Once everyone's starting to say, oh, the worst is behind us, things are going to be good. I even expect a couple trade deals to be announced in the next week, which I think propels us into those upside resistance levels. But once everyone starts to get complacent, that's my guess where we start to see the next leg down. What could be the culprit of that? I think we get the jobs number next Friday. I think that could actually be a bad number. It could be a really shocking number. I think we start to get more data from economics. Remember, economic data that's been coming out lately has been lagging, meaning a lot of it was from before these tariffs were imposed. Once we get this data out there, I think it's shocking to people how much damage has been done to the economy. I think that's your catalyst for your next move to the downside. We also have more earnings next week, folks. Again, great trading earnings this week. We'll trade them again next week in smart money stocks and ETFs within the earnings trader. I hope you guys all check out Verified Investing and join us here for next week's action. It's going to be wild. Lots of trading opportunity. You guys have a great one, great weekend. Take care.